Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to be taking you through Euro US dollar as price has broken through the parity level. So parity level, the big level in the market that everybody's talking about at the moment. Will it hold? Will we see prices move further? Now, I think we've got to take a bigger picture look at the market and understand what is going on fundamentally and whether there's an opportunity for euro dollar to continue to the downside or whether we're going to start to see it recover. Now, I am more on the side of euro US dollar downside. The reason being, or the multiple sort of reasons why, I'll probably actually try and type this on the chart. Is basically due to the fundamentals in the market. Now, the Federal Reserve, although they are starting to kind of talk about sort of tapering, I suppose tapering actually is the wrong word, basically not hiking as aggressively, okay, now this is where spelling's going to come into it, aggressively, ignore my spelling, it can be horrendous. So Federal Reserve potentially not hiking as aggressively could be a factor that maybe we do get a little bit of a spike. However, the problem that the Federal Reserve have is inflation rising still. So inflation data came out, CPI numbers came out, CPI came out higher. We've seen the Federal Reserve talk about in the past that they'd want to try and get a hold of the inflation, and the CPI numbers are higher. So what that is going to lead to is the Fed, okay, hiking rates further. Now, if we know they're going to hike rates, but it's how aggressive are they going to hike rates. Now, because inflation is rising, we could see 100 basis points jump by the Fed. Now, there's been talk that it's around about 50 to 75 basis points at the moment that they're considering a jump by. But because inflation is rising, we could see a little bit more of a bigger move to the 100 basis points, which is about 1%, or which is 1% rate rise. Now, let's take a look at the sort of ECB. What are the ECB's plans? Well, currently the ECB are negative rates, okay, but they did talk about the potential to come out of negative in September or by September, okay. So the ECB really are staying fairly neutral for now. They're not hiking rates, which is a little bit of a shock to the market. They expected the ECB to hike rates. You've got that battle as well that even the Swiss National Bank has hiked interest rates, and the ECB have still not really done much. So ECB is still negative. They reckon they're going to come out of that negativity in September. Maybe we'll see something in this July meeting as well. But to me, fundamentally, the dollar is stronger than Europe. So I'm expecting further downside to this market. I don't think we'll see too much of a bounce from this area. Now, obviously, just because I'm expecting the market to decline and for price to continue to move further to the downside, doesn't mean that we can't have pullbacks. We can't have the market move back to the upside slightly before continuing that move. And you can see sort of June was quite a bullish month for the price of the euro US dollar because we had that sort of slight pullback in that downward trend. So I am expecting maybe a little bit of a pullback. Maybe we will get this parity level defended. I mean, if we look at this 4-hour time frame, we can see that price has broken that parity level but is now trying to climb back above it. And if we were to close above it, we could make the argument that price is potentially going to come back to an area of resistance. So you've got these highs in here around about the 101112s, or you could look a little bit higher where we've got this sort of level here where you had that extension to the downside. So we could eventually see price just pop up slightly, hit one of these levels, and then continue to push to the downside, because I just think overall the US dollar is a strong currency. It's backed quite aggressively by the fundamentals in the market. I think if the Fed were to just come out and say, look, despite inflation being quite high, we are just going to hike by 50 basis points and not the sort of 75 to 100 basis points, that could disappoint a lot of investors, and the dollar could start to taper off because of that. But, you know, in this sense at the moment, I don't see euro really being a stronger currency than the US dollar. So I'll be looking for opportunities on pullbacks, and if we can break back towards these highs in here, it could offer us some interesting opportunities to continue to see if price will trade below parity and a bit further. Because if we go back to that monthly time frame and just zoom out, you know, price has been a lot lower before. You can see that we've been around these lows, around about 84.46. You know, we could even argue that price could come up into this sort of area where you have resistance, support. So we could see a little bit of a drop through before seeing that continuation back to the upside. So keep an eye on euro US dollar. Obviously, we've broken a major level. We've broken that parity level, and buyers are stepping in at the moment. If price, however, comes back up into some of these key highs, let me just highlight this one with a rectangle, then you could look for potential opportunities for euro US dollar to continue lower. Thanks for watching this video update. I hope that made sense. If it did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll catch you in the next video.